Hey Bulls, how we doing? What's going on? It's your boy. It's the Sherpa. It's the Stock Sherpa on YouTube. It is Chase at Ever Bullish. It's the Sherpa at Substack.com. Welcome. Sunday recap / Monday game plan going into it on April 24th of 2022. The market has taken a huge shit all over the place, particularly leading in tech. A couple of the trades that I recommended last week were bad. I'm going to tell you what to do with those. And then really, there's just one trade to do. I'm loving this volatility. This volatility is going to make us rich. So get with it. Hop on to my Substack. Go to the Substack thesherpa.substack.com. That's what we're going to do together. Now I'm going to go over with what we're going to do with the game plan. Remember, you can subscribe and get all of my trades. You also get my cell phone, as well as you can text questions. You get weekly game plans. I'm going to give you a couple Sherpas lists as well. So let's get to it. Go to the Sherpa.substack.com, and it's going to look something like this. By the way, these are some of the trades. This is what you get when you look at the site. We're steering away from the Ever Bullish website unless you want to buy a portfolio. And really the best content that I have is right here. So I've already got this published post that's about to go out to all my subs. So remember, go subscribe. But the game plan is that I like Tesla. We have tech earnings on deck. But there really is only one trade, and that's the short the Treasury. In 83 and 86, Warren Buffett saw that interest rates were going to rise. So he bought Treasury puts. He did it with other type of derivatives, but now that we have ETFs, we can buy Treasury puts. So if you take nothing from this video, remember, buy puts on the Treasury and do it in the way that I tell you to do it, and do it in the way that I told you to do it at the paid Substack. I'm going to take some of my my bulls to behind the woodshed here in a second. But before I do that, let's keep this fun. Let's keep this inviting. Let's keep this for everyone here. And we have basically, this is the cover of Market Watch. We have what is next for the stock market as investors fear the grips with the Fed peak hawkishness. I was listening to a pod this morning that was talking about potentiality for next month or in May, the Fed raising rates by 75 bips. That's not going to happen. They're doing the right thing by raising rates 50 bips. I think they should have done this last year. If you've been following me for the last 3 years, you'd know that. But it doesn't matter what I think. It's what the market thinks. The market's going to digest 50 basis points just fine. That's why I think this sell-off was nonsense. The Netflix thing, because I know you guys are going to ask me, the Netflix thing has been a long time coming. I remember back in 2010, a hedge fund manager coming and visiting us at my old office and telling me that they were short Netflix and that it was an unsustainable business model. They ended up losing a ton on that trade, and then they went long, and then they got whipsawed by betting against it. But the true valuation was there from the beginning. They just cannot compete when it comes to password sharing. I think that's what this is all about. So take that for what it's worth. And remember, we also got a couple other things going on here. The real estate market is heating up from the rental side and selling off from the ownership side because rates are going up. You know, just 3 months ago, we were talking about people, 4% mortgage rates being for a fixed rate 30-year being a high, and now 5 is, unattainable, and it's going to be 5 and some points. So there are a lot of worries. There's also a war going on in the Ukraine. So shout out, the people in the Ukraine. We're with you guys. And let's just talk stocks on this channel. Remember, we're apolitical. So this is a cool story. This is my girl, Allie Swart. Her name used to be Allie Postaway. She's a dear friend of mine. She lives in the Pittsburgh area, and she's a certified financial planner, just like I used to be before I let go of my licenses to start this channel. We go all the way back, and it's going to be a beautiful story when I've got the #1 Substack in the world, and she's already killing it. So she's already at the top of the mountain. But Allie did something that I thought was really cool. So go follow her for financial planning. Come to me for the trading. And you've got all you need on Instagram. So Instagram, Allie Swart, CFP. And the big earnings this week is that Monday we have Coca-Cola. Tuesday we have Google. Google, by the way, 5% of the S&P 500. Microsoft, 2% of the S&P 500. We have Meta, which is 11% of the S&P 500. Just 3 months ago, rather, at the beginning of this year, Meta was number 3 on the S&P 500. You see how much they move and how many decimals we're talking about here. We have Amazon reporting on Thursday, Apple and Twitter. So we have a tech-heavy week, right? Chevron on Friday. No one's going to even care about that, but they are going to just totally blow out earnings. How many hundreds of billions of dollars do you think that they made? I don't know. We'll have to guess on that one. and how many billions of profits. It's crazy we even talk about that. So what are we seeing here? We're seeing that we're going to get all the numbers in tech. That's going to be a super volatile week ahead. I'm not telling you anything you don't know. You could have looked at this and saw that too. So consider using my straddle strategy that I posted a couple months ago and that we've been taking to the bank together. You could do SPY straddles. You could do daily SPY straddles. You could just go long or go opposite the market on Monday and then flip it on Tuesday. You can do a lot of things with short-term options, maybe 10 or 12-day options on the SPY. Let's keep it moving though. So tech, this is kind of cool. I like to incorporate the social media component of this because we don't have to have Morningstar, tablatures anymore or crazy reports any longer. All we have to do is pull up our cell phone. So that's where I get some of this info, but this one's kind of neat. You can look at everything that's down and how far it's down on the year. You can also see kind of like what's going on as far as where the buzz and the dumb money in the market is. I'm getting a notice that my computer is dying, but I'm not going to stop here. If it dies, it dies. Rocky? All right. 1-day performance sectors. Let's just look at all the awful dog shit performance from the market this past week. Real estate made money. Consumer staples made money. Everything else lost money, including energy, communication services, and then tech stayed kind of in the middle. It was really the big names on the NASI like Netflix that lost so much, and then semiconductors as well, AMD and NVIDIA. I'm still in those trades, bulls. If you followed my last week's trades on that, I'm still in them. I still believe in them. I rolled to May on some of those SOXL trades, and then I'm just taking the loss and holding on the April 29th. So we'll see what happens there. Jesus H Christ. Yeah, this is so funny. Y'all know I hate real estate investing. If you've been following my channel, I think real estate is just such an unethical and shitty business practice with way too many grubby hands in my grubby pot of money. But I think the Sherpa is going to have to start investing in real estate stocks. So I actually do invest in real estate on the side in my personal life, but I just don't believe in it from a stock perspective because there's too much transaction cost. But it looks like that's where the market's telling us to go, and I do not fight the market, and I do not fight the Fed. So I will have a list of real estate centric companies as well as defense stocks just in case later in this year. And when I say defensive stocks, not defense stocks, defensive stocks, I mean the stocks that resist bad markets, not defense like military defense like missiles and tanks and shit, even though we'll have a list for those too. So that's going to be on the Sherpa Substack, so thesherpa.substack.com, and I will put that out later in the week. So make sure to jump on that if you haven't yet. Remember, my goal is to be the #1 trading Substack in the world. I'm number 5 right now, and we've only been around since October, so get with it. Sherpa, baby. Rates increasing. The only real direction that we know of is rates probably, most likely, almost guaranteed to be going up. And the Fed is telling us that we don't fight the Fed here. So that's why I'm so big on the TLT puts that I published recently. And I'll show you those again. And then I also love FAS. I can't explain why FAS went down. I don't know. I'm getting a lot of bulls that are pissed off at me that have lost money in that. It was at 120 a couple of weeks ago. They were asking me if they should trim. I told them no. I still believe that. I've dollared in. I've lowered my basis. I like this when it was at 120 and told you to buy it to ride it to 140, and now it's at 96. So the theory here is that financial companies make money when interest rates go up because they have a leveraged effect on their revenue based on what they're holding, and they also have the cash to deploy. So if you don't like that trade, that's fine, but it's going to win, and that's where I'd rather put my money than into some of the other dumb shit all y'all are buying. Here's the chart too. This down gap kind of hitting the lower lows there. We also didn't have a lot of volume with this sell-off, so I just think that was the market being scared shitless. And remember that this was the same week that banks made all that money. So I can't really explain why that happened. And then remember, RSI is hitting 30. So instead of trying to explain it, instead of running from it, I'm just going to buy more of it. And then I'm going to roll the options that are underwater. And please, guys, please don't be this guy. He's probably going to watch this and listen, man, I'm sorry, bud, but here's how it goes. I mean, I've spent 2.5 years building up this Substack. Well, in the form of my website first. I've had to learn to code. I've had to get, probably, I don't know what you think, 6,000, 9,000 hours working on this just to be able to help you at a reasonable cost. Don't leave me comments like this in my YouTube. This shit is the biggest slap in the face, millennial entitled bullshit that I've ever seen. You asked me 4 questions. You asked me to answer the questions individually, and inside of each of the 4 questions, I counted there was 39 questions in here, and every single one of those questions had been answered on my YouTube. It's also all of those questions are being answered routinely in these videos. And then you also asked me to respond individually. And you also said thanks ahead of time, is like I was going to answer all this shit for you. So don't fucking do that, man. Just subscribe to the Sherpa Substack. The Sherpa.substack.com. I created this so I could teach everything that I know to investors at a reasonable cost. And I put a lot of blood, sweat, and tears into this shit. So just whoever posted that, man, just go pay for it or just kindly fuck off. There's a lot of guys out there that do this. SOXL, this is from last week. I just want to highlight the trades that I like. I still like SOXL, and it's not because I'm underwater and I'm down like 70% on that trade. I like FAS for the reason mentioned above. And then why not trade like Warren Buffett when you have the opportunity to trade like Warren Buffett? Remember, Buffett in the 80s, you can go Google it. You can go look it up. You can read all about it. If you've ever taken any graduate level economics courses, they've gone into direct detail about exactly what happened. I don't feel like explaining that to you, just straight up. If you buy puts on the TLT, that's the best trade that there is. Here's the proof that I'm making these calls ahead of time. This is from last week. And these are in real time when I sent them. So for all you guys that are considering giving me a subscription, I'd like to earn it. And I'm just showing you that I'm doing it. And also make up for that last guy, man. That got my blood boiling. Dividend paying stocks. I got a little list on here. I stole this off of Instagram. Again, trying to incorporate some of the social media aspect to it. But I like Coke. I like Heinz. I like P&G. I don't like any of the other stocks on here. I'm going to make a list for defensive sectors as well as real estate coming soon. And then also, I don't know why I felt like saying this, but I did. I've been looking at the Tesla chart. I think we're going to hit a breakout. Apple is likely going to not announce. So I'm sorry, I should say that Apple is not likely to announce the Apple Car. But in case they do, not only is Apple too expensive right now, in my opinion, but Tesla is too cheap right now, in my opinion. Elon's getting all the buzz in the world, and there's not a better time to buy Tesla. I am long Tesla. I think you should be long Tesla. And just facts is facts. If I believe that they will have something to do with the Apple Car when it comes out in some type of joint opportunity together. And then finally, remember, again, if you like this kind of content, if you like my style, if you like my moves, if you like my trades, or if you just want to become a better trader, get off your ass, go to the Sherpa Substack. I'm sorry, it's the Sherpa.substack.com. And you will get content just like this. And while I'm doing this, AFG, LFG, LGR, all fucking good. Let's fucking go. Let's get rich, bulls. It is the Sherpa out.